Alright, so I've named this video GBPJPY $20,000 Forex trade breakdown because it's here in Texas. It's about 8 p.m. on Sunday night and the market has just opened and I'm sitting here with my dogs, just chilling here, about to go to bed here pretty soon. And GBPJPY, which is a trade that I took last week on Friday, right before market close, ended up just hitting the profit target right now. What I want to do here in this video for you is show you exactly how I took this trade, the reasons why I entered, how I structured the risk, and then what the outcome was. That way you can see mainly just how simple this is. So let's go ahead and go right here to the charts. So first, just so you can see this actual trade right here. Net of fees and commissions, it was a $19,000 profit. But on both trades, you can see the actual P&L was over $10,000 for each entry, and this was just one position at $20,000 risk with a 1-to-1 risk to reward ratio. So after the swap and commission, it came out to about $19,000, and I currently still sit in a trade on GBP This is a group where I call all my trades out, so if you'd like to follow my trades, I've put a link in the description for you so that you can join that. But let's go to the chart and actually break down why I took this trade. So this is GBPJPY, and you can see it's already started to fall right here, smash into the profit target, and this is what the trade actually looked like right before it was about to hit the target. I just opened up my charts tonight because I usually look at charts before I go to bed, and I just noticed that it was very, very close to the profit target, so that's why I thought I'd make this video because it just hit. So you can see right here I just sold around these highs with a stop up there and a target down here. So I'm going to break down step by step exactly how I found this trade, and I'm going to show you like every single individual detail for how you can find trades just like this too, and you can risk however much you want on it. Trading is risky and most people lose money, so I don't recommend doing this on a live account until after you get some experience on a demo account. Then if you get profitable in demo, maybe consider doing it live with a small amount of capital. But you could risk $50 on a trade. You could risk $100. You could risk $1,000, $10,000, $20,000 like I did. And there's oftentimes I risk more than that, anywhere from $30,000 to $50,000 sometimes. And you can risk whatever you want. And if you just take these same simple trades over and over, you're going to win some trades, you're going to lose some trades. But if you're doing everything in the way that I'm about to show you, then what that means is that you're going to put yourself in a position where you're a little bit more likely to make a little more than you lose. Now, of course, like nobody can guarantee you anything, but it's worked for me, and I've been trading for almost a decade. I've made millions of dollars trading Forex, crypto, and stocks, and I just do this very, very simple stuff right here that I'm about to show you. So let's get into it here. So on GBPJPY, I'm going to actually just clear all the drawings here from the chart. We're just going to start from scratch. I started on the daily, but to show you this, I'll have to go to the 4 hour. So what I noticed here on GBPJPY, this would have been Friday around the beginning of the day, is I noticed that price was getting close to a resistance zone. So I noticed that price was coming up here to this area, and this is an area where price has had a couple bounces before. So this general region, right, price bounced away there, it bounced away here, it bounced away here a couple times, and then another time here, and then another time here. So I just thought to myself, you know, if price gets up into this area, I think it would be worth a shot to sell, because since it's bounced there at that area so many times, very, very clearly here on the daily chart, I just thought that it'd be a worthwhile trade to take. Now, technical analysis doesn't allow you to predict where price is going to go. It just gives you a really good way of controlling risk. It gives you a way that you can get into a trade with an entry that's pretty clearly defined, and then you can place your stop loss at an area which is reasonable. So that way, if you're wrong about the trade, you have a stop loss in place, so you lose a little bit of money. And then it also allows you to have easier profit targets met if you're structuring things in the way that I'm going to show you here. Because you'll have profit targets hitting all the time. A lot of people go for like high risk to reward ratios, 1 to 3, 1 to 5, 1 to 10 risk rewards. What I found is the win rate tends to be pretty low and the losing streaks tend to be pretty long, and then you have to risk lower amounts per trade because of the low win rate. I just personally prefer to just risk a lot of money on a trade that I have high conviction on and that I'm pretty confident is going to result in a profit. And if I lose, I generally lose a portion of whatever I was risking, because oftentimes I can get out of the trade early at break even or a small loss. But even if I do lose, I lose whatever the risk was in the stop loss. And it's a pretty quick trade too, and I get a couple trading opportunities every week, anywhere from like sometimes 3 to 10 trading opportunities. I guess the average would be 5 or 6 trading opportunities a week. And by keeping lower risk to reward ratios, what you might find is that you're having profit targets get hit way more often. And this does a couple things for you. For one, it allows you to just risk more per trade because you're not going to have as long, prolonged losing streaks with a 1-to-1 risk reward ratio as compared to if you were using like a 1-to-5 risk reward ratio. And number two, it allows you to build a lot more confidence more quickly. A lot of times I see people getting very, very nervous to take trades because they know that it's likely to lose if you have a really tight stop loss and then a really big profit target. The likelihood of you hitting your stop is just so much higher. And so it really damages a trader's confidence and conviction of being able to say, yes, I think price will move from here to here. And so I'm going to get in, and if I'm wrong, it'll hit stop and I'll lose a bit. And if I'm right, it'll go to the profit target and I'll make a bit. So that's why I use low risk to reward ratios usually, anywhere from 1-to-1 to 1-to-2. And everything in between. So what I did is I drew a resistance zone right here. And then it's important to think of support resistance as an area and a region. Whenever you start trying to draw it too skinny, like something like that, you end up running into a lot of decision fatigue because you'll have to ask yourself, okay, is that the zone? And then if you're using that zone, where does your stop loss go? Do you sell only at that location, or can you sell above or below it? Does your stop loss go just above the zone right here, or does it go above the wicks? What I like to do, just to make things real nice and easy for me, is I'll only use zones that I find on the daily and the 4-hour chart. What this does for me is it just makes things so much more simple and easy and clear. Because if you go to the daily chart, all you have to do is just go to any pair on the daily chart, look at where the current market price is, and then just draw the most clear resistance zone above price, assuming there is one, and then draw the most clear support zone below price, assuming there is one. And if you can't find anything because price is in like free fall going in a downtrend or something and you can't find the next support zone, you just don't have to draw one. Just draw the next resistance zone. And if you can't find that, in my opinion, you probably shouldn't place a trade if you're just going to be swing trading support resistance like me. So I just draw a zone above and below price, and then I just set 2 alerts, right? I'll set one alert down here at this area, and then I'll set one alert up here at this area. So I had my alert here around these highs, and the alert got triggered on Friday. So I'm going to walk you through step by step to show you exactly how that looked. I'm going to take the rest of these zones off just to keep things real simple for you here. But I was essentially waiting for a push up into this zone, and then when price pushed up into there, I was going to sell. Now, what is the trade structured like? Whenever you're trading off support resistance, all you want to do is these 3 things right here. It's very, very simple, okay? The first thing is you want to make sure that whenever you're trading off support resistance is that you enter inside the zone. Do not enter if price is starting to move away from the zone, or if price is outside the zone, or if price has obviously broken past the zone, because at that point it might turn into a breakout and it might not bounce anymore, just a little more often than not. You want to make sure that when you're entering at the zone, you have to enter inside the zone. Now, it sounds like such a simple little basic guideline, but what I see a lot of people doing is I see people waiting for price to come into the zone, and then it starts to come out of the zone, and then they enter like that, like something like this with the stop just above the highs. What ends up happening is price all the time will then just retrace back into the zone and play around, and then it might hit the profit target, or it'll go all the way really deep into the zone, and then it will start playing around. Then you have to decide whether to close it at break even or early, or in a lot of cases it'll just go hit the stop loss just to turn around and then come right back down below the zone. So whenever I'm trading, what I wait for is I wait for price to get into the zone, and I make sure that under all circumstances my entry is inside the zone. Now, I'm not perfect. Sometimes I get in a little bit late and it's not exactly where I'd hope it would be, right? So it's a little bit like lower down in the zone. But as long as price is inside that area you draw, that is the first like little basic criteria here. And again, the zones, they don't have to be anything like this where there's too much data encapsulated, but they don't have to be like this either where you're just trying to like pinpoint an exact location. Because even if you do that, price spikes past zones all the time just to turn around and come right back below them. So if you're using really, really tight zones like that, it becomes very difficult to structure the risk because you're going to be taking stop outs all the time. And also you're going to be missing a lot of entries because it's not always the case that price comes like deep into a zone to give a good entry. So that first guideline is make sure that whenever you're trading off support resistance, you actually enter inside the zone, at least halfway into the zone, if not deeper. So I waited for that, and then on Friday afternoon, or I think it was during the New York trading session, my alert went off that GBPJPY had spiked up here into the zone. So you'll see where I called this in my trading group where I call all my trades live. We probably made about maybe like $150,000, maybe $170,000 after this GBPJPY trade. But we've probably made, yeah, like a lot, like $170,000 like over the past 3 weeks for all the trades I've called in here. I can't say we, but like I personally made like $150,000 to $170,000 just the past 3 weeks here from the trades that I've called it in this group. And then everyone following me, if they're like, let's say you're risking a tenth of what I'm risking, you would have made $17,000 or 15,000, or whatever it happens to be. So for the people who follow me here in this group, it's very, very simple. Like look at how I called the trade out. This is what I do for every trade. So this was Friday at 6 a.m. So about 3 days ago. All I did is I post a screenshot of the actual entry, and I put the stop loss and take profit, and I show everything. Then I show the live P&L terminal as well, so that way you can see the exact entry, the numerical digits, how much margins chewed up on it, the position sizing. And then I just put a little simple thing here. I'm short on GBPJPY, $20,000 risk. The cool part about this group here is that I don't even have to give any analysis, right? Since I show the actual terminal image, since everybody who, all my clients and probably you guys watching here in the YouTube video, everybody knows I just trade off support resistance. And so it's very easy to follow because they'll look at the chart and they'll say, okay, yeah, looks like he bought at support or he sold at resistance, or it was like a break of a support zone and price came back to test as resistance and he just sold there. Since it's so simple, you'll also notice I don't even really have to draw the zones. You'll see here on my actual MetaTrader 5 terminal, I don't even have a zone drawn there, right? It's on my trading view, sure, to where I mark up my charts, but I don't even put the zone here because of how clear and obvious it is. Whenever price comes to a resistance zone that's real clear, I sell. And when it's a clear support zone, I buy. So all I put is I'm short GBPJPY with a $20,000 risk. This way you can see, okay, if Nick's risking, this is 100 standard lots on GBPJPY, and that's $20,000 risk. If you want to risk, say, say like 1/10 of that, right? Which would be $2,000, then that means that you would use 10 lots, just 1/10 of the lot size. And then if you entered one GBPJPY sell at 10 lots, and then you put the stop loss in the same place that I put it, that means that your risk would then be $2,000. All right, and you can just keep scaling this down however much you want. You want to risk $1,000, and you just scale down the position sizing. That's why I just show my terminal and everything right here. That way you don't have to do any of the math yourself. You can just look at the trades that I took, and you can look at the lot size and everything, and you can look at the stop loss placement, and then you can look at the risk right here, and you can just see, okay, well, he risked 20K on that, so now I can adjust the position sizing for my own. So I called that out. That was 6 a.m. on Friday, so it started going into profit. I just posted it was going to profit. And then right here, you can see tonight, so this was around 7:51 p.m., so a little bit before I started making this video. You can see I posted this here as it was getting to the profit target, and then this right here after it filled the profit target. And this is the P&L again right here, so $20,000. Now, a good reason why I do this, right, is because whenever price gets up into this region, you can see I sold, up here. It's all in that exact terminal image. But the stop loss can be right above the area, and the take profit can be just at a 1-to-1 just to start the trade off. And you can see right here, so my stop and target was even closer, right? Because it's already hit the profit target. So where's exactly where I entered? So 200.32 is where my entry was. So literally pretty high up on that wick. So 200.32, so something like that. And the profit target was right there. And the stop loss was literally just above this zone. So you can see as I've sold here at the resistance zone, and then I put my stop loss above the resistance zone, and then I put my target at a 1-to-1 risk-reward ratio. So the first thing you do, obviously, is you make sure the entry is right there at the zone. And the second thing you do is, as long as your entry is at the support or resistance zone that you're buying or selling at, respectively, just put your stop loss on the other side of the zone. That's it. And then risk a dollar amount that you're comfortable risking. Whether you're doing it on a percentage basis or a dollar amount basis, it doesn't matter. It's all personal preference. I risk a dollar amount per trade because I never put all my trading capital into one account. Right now, the current account I'm trading on has a little over $400,000 in it, but that's just a portion of my trading capital allocated to trade Forex because I have a lot of crypto holdings And then I have some stock holdings in the S&P 500 with my stockbroker. And then for Forex, I allocate about like 25 to 30% of my capital to trade with. And then of that capital, I only put a portion of that capital into an account. That way, if something happens to the account and it ends up blowing, like God forbid, that can still happen with black swan events and stuff. So I don't ever keep all my capital in one trading account. So this means that I can risk whatever dollar amount I'm comfortable with, because I already know kind of what my risk tolerance is and what I'm comfortable with. And I already know what's going to be worthwhile to trade. There's been a lot of other things I've tried trading. There's been a lot of things I've done experimentations with. And what I've noticed is like Forex continues to be my bread and butter 9 years later, like 9.5 years later since I started trading. And so it allows me to be able to structure my risk. So put your stop loss just above the zone and then risk a dollar amount that you're comfortable risking. You can use a position size calculator, or if you're following my trades here in the Nick's Trades group, you can just do a little ratio. Like if I want to risk 1/20th of what Nick risked, let me just do 1/20th of the lot size. You just do 5% of the lot size that I have. Then you got the lot size. You already know where the stop loss goes because you can see it all right there on the screen. And then it becomes nice and simple. So the third thing is, after you enter in the zone and then put your stop loss past the zone, set your profit target at just a 1-to-1 whenever you're starting. Now, do whatever you want, but this is just my generalized suggestion. Putting a profit target at a 1-to-1 means that worst case scenario, given enough trades, you're going to have about a 50% win rate. Half the time it'll hit stop and half the time it'll hit target. And it allows you to start being able to recognize which trades are going to start going against you and going sideways and moving towards the stop loss. Then you can get out of those trades a little early. And then when you find trades that start going to the profit target, you let them go all the way to the profit target. And with a 1-to-1 profit target, it's not very far, so your trade duration is going to be much shorter. You don't have to sit in trades for weeks and weeks and weeks. And believe me, I've been there as a swing trader. I've been in trades at some point for like 6 weeks before. It's a lot to do. I prefer trades that take a couple days to maybe a week or two max. And I get plenty of opportunities to do this. And now we've got Lucy saying hi behind me, little puppy dog. So what I do is I enter at the zone and I put my stop past the zone and I put my target at a 1-to-1 risk reward ratio just to start the trade off. If you just do those 3 things, and nothing else, clear support resistant zone and enter inside the zone, stop loss past it, and target just at 1-to-1. While other people are starting to get into trades like this, like say for example, because it's already rejected and they got to stop above here and they got to take profit down here, even with the closer stop like that and a target here at a 1-to-1 risk reward ratio, people are just getting into trades when you could have already had your profit target hit. That's what's so important about waiting for very clear zones, is they generally have a little bit higher of a probability of bouncing, in my opinion, whenever you're using it on the higher time frame. It's just an area that more people are interested in trading at because it's very, very clear, and it's something that, when people go to the daily and 4-hour chart, they can put a lot of money behind those trading decisions. So while other people are just getting into a trade, right, a lot of times you'll already have your profit target hit, or you'll be very close to it, or you'll be sitting in a pretty good profit and waiting for it to maybe continue into 1-to-1.5 or a 1-to-2 risk reward ratio, or I don't know, maybe even more than that. I stick to 1-to-1 to 1-to-2 usually. It just kind of depends, but I generally keep in that threshold because since I'm risking so much, there's trades I could risk $30,000 on and it goes to a 1-to-2 and I make $60,000 on a trade. Last week in the YouTube video that I made for this past weeks of trades, my first trade of the week, I made $68,000. You can just make so much money whenever you're just waiting for clear trades, entering at the zone, stop on the other side, and a target of at least a 1-to-1 risk reward ratio. So this hit the profit target and everything worked out nice and easy, and it was nice and plain and simple. So whenever people start telling you about their trading approaches and you see people here on YouTube telling you all the cool stuff they're doing and all the complicated strategies they're using and all this fancy stuff that sounds magical and mysterious, just remember, most people, and this is just coming from a person with almost a decade of experience trading, when I see most people doing really complicated things, the first thought that comes to my mind is that I really doubt they're able to make money consistently. Now you may have periods of win streaks if you're a person like that, and if you're a person trading an approach like that, but what I really struggle with is seeing how somebody can predictably do that over and over. Because let's say you risk everything you have on one trade and it works. Great. Now you've with the 1-to-1 risk reward ratio, you've doubled your money. Right? So if you risk your entire net worth on a trade, you double your money. Okay, cool. But what are you going to do tomorrow and the next day and the next day, and for the rest of your trading career. You have to have something somewhat systematic that you can like do predictably. And that's not to say that your experience and intuition and subjective decision making is not going to matter, because it does matter. You're going to use your experience to sometimes sit out of trades that they may set up technically, but you may get a weird feeling about them, and then so you end up just not taking them. You end up passing on them. But you're also going to find trading opportunities where everything sets up perfectly fine technically. Your intuition aligns. You don't really feel any red flags or anything like that. And so you take the trades, and then you have a very systematic, predictable way to do that same thing over and over and over again. And whenever it's just quite simple like this, like for example, this GBP CAD trade that I'm in right now, it makes it very, very easy for you to do the same thing over and over again without obsessing over all the stats. So for example, this trade, when I originally took this trade, this was the zone that I had drawn on GBP CAD. You can see I've adjusted it with that little zone where price is at now because that's the previous high. But this is my trade. I've sold here at this zone, so my entry is like something like that, and my stop loss is above the zone, and my take profit is down here at a 1-to-1 risk reward ratio. And we'll actually go and look at the exact parameters for this trade from when I called it. So let's go back here, GBP CAD looking good. So here's where I called it. So I called it on September 11th here at about 11 a.m. So I entered this trade. You can see sometimes I'll even click to highlight the numerical digits so you can see how much I'm risking. So I'm risking just a hair above $50,000 on this trade, and you can see this is the resistance zone I had. So in this case, I actually drew it here in MetaTrader. But I just entered inside the zone, I put my stop loss past the zone, and I set my target at a 1-to-1. And you don't have to get it perfect. As long as your stop loss isn't too close to the zone, or like way too, just like 1,000 pips away, like it just doesn't have to be that far. Just find whatever clearly defined zone that you can find, and then if it is very clear and obvious, draw the zone. And then whenever you enter that trade, just put your stop loss on the other side of it. Again, not too close, but not too far either. You get the hang of it after a while, and if you're following my trades in the next trades group, you can kind of learn through experience because you're like, okay, that's how Nick does it. This is how he took this trade. This is where he structured it with his stop loss in the zone and everything. So you can just kind of learn a little bit quicker through experience that way. And whenever I entered here, you can see I'm entered at the zone, 50K risk, and an initial profit target of a 1-to-1 risk reward ratio. That's what it looked like the moment I entered, 50 standard lots, and you can see how I called it here. I'm short on GBP CAD, $50,000 of risk. So, if you wanted to risk $10,000, you'd use, like a 10 lot. If you wanted to risk just much smaller than that, like $5,000 of risk, right? You just divide this by 10. So you'd be using like 5 standard lots. And you can pick and choose, right? You can go all the way down to risking like $100 or, $500 or $1,000, like whatever it is you want. A lot of the clients who follow my trades in here, they risk higher dollar amounts on these trades just because it makes it more worthwhile. That way, it just the subscription cost per month just pales into comparison on what the profits they can make whenever we're on a nice win streak. Otherwise, it's just, if you're going to be going and risking like $10 on a trade, if you win, you make $10, and that's cool. But for somebody who has a lot of capital, it's just kind of a waste of time, right? You want to be making sure that your money is actually getting you some sort of a good ROI. That's why I just risk a lot per trade and going on high conviction trades. So whenever it comes in here, you can see GBP CAD. That's why I entered, and it was right here. So I sold, and then it started going into profit, and it was at one point it was in $4,500 profit. As it sits tonight, it currently sits in about $2,000 or $3,000 profit after the swap fees, and we're gonna see where this trade goes. So this is the trade that I remain in going into this week, and that was the GBPJPY trade that was just closed in profit. Sold at resistance. I put a stop on the other side of the zone, and I set a 1-to-1 risk reward profit target. Hope this video is able to help you. I am probably going to go to bed right now. My dogs are asleep, and it's dark outside, so I will be going to bed, and I will see you guys in a video probably tomorrow. See you later, my friends. Bye.